Hi, this is Zach here with the Bulletin board here at Zach's Traders Cafe for Thursday, the 12th of September. Starting off with the FTSE 100, which is regrouped in a positive way. We've got an uptrend line there now, slightly higher than we had before. It was down around the 80 or 8,000 level. Now it's up at the 8180 level, and above that looking for at least a retest of recent resistance through 8400. Obviously the big prize 8640 in the top of that rising trend channel from this time last year. If we do break down, we've got the risk of a move down to the floor of that broadening triangle from the end of May, and that's currently riding at 8010, but just overnight with a rising 50-day line and a bit of bullish divergence in the RSI window, things looking a little better. So we've got a higher swing low than maybe that we expected. Moving on to the DAX, and here the picture of, I suppose, similar to the FTSE, so bear trap rebound from below the 50-day line. We've gapped up, which means that we've got a bear trap island reversal, gapping down at the beginning of the month and gapping up today. Just need an end-of-day close through 18,600 to give us another chance of an assault on the record highs towards 19,000 later this month. RSI on the right side of 52, which is a positive, the glass half full rather than half empty. And as long as we don't get any breakback below the 18,200 area recent support, we should be safe from a test of the 200-day moving average in the floor of that falling trend channel from May around the 17,800 level. The Dow is next, and here the picture of market in recovery mode or improvement mode. We've had a bear trap rebound from below the 50-day line there, 40,300, and above that looking for obviously a retest of the best levels ever, 41,600. Nice that the market closed above that July resistance line there at 40,700, and the longer we stay above that, the better for this market. But a decent intraday rebound, I think, was noted by many people as well, basically filling that gap from back in August, the floor of the gap there around the 40,000 level, so just bouncing off that yesterday. 39,993 the low, so nice psychological rebound as well for the Dow. Moving on to Bitcoin, and here it's been a bit of a struggle of late, trying to get back above the 60,000 level rather. We're basically looking for this market to at least hit the 50-day line there at 60,000, and also that old broken uptrend line there from October last year. But at least while we're below that, still worried that we might have to test the low 50,000s one more time. 52,000 at the level of that late February support line projection. RSI still below the neutral 50 level, so still that's why we're looking for the possibility of another test to the downside. Be clear the 50-day line, then the obvious place would be obviously 65,000 and late August resistance. Moving on to gold, and here consolidating at the better levels, so normally between 25.20 and 25.70. We're just below that. Looking for the big breakout there. RSI at 57, which is in a good place for a potential breakout, and hoping for as high as 26.50 by the end of this month. Obviously, there's a lot of slack to be taken up at these higher levels. On the downside, the worst, we're expecting 24.80 in the floor of that channel there from back in December. Moving on to the stocks, and starting off with Avacta, which is actually looking quite intriguing at the moment. Very quiet for the stocks at the moment, but here we see the stock breaking that 200-day moving average properly for the first time basically since the beginning of the year. In fact, we went up above it properly since December. We've got a potential rising trend channel there from July, top of the channel there heading for 85 or 86 pence, and we're looking for that if we get an end-of-day close above the 200-day moving average at 73 pence. RSI at 56, which is in a good place for further recovery. And you can see yesterday's price action was very strong in the sense that we had a open at the low and closed at the high, and so far we're doing the same today, so it does look as though Avacta ready for a little positive move, even though it's always difficult to break a falling 200-day moving average. Anpario is next, and here apparently it's animal feed additives, but here we've got the rising trend channel there, the top of the channel there heading for 355 pence, and that's valid while we hold above resistance on the way down around 305, which looks quite doable, especially after the unfilled gap to the upside through the 50-day moving average, which is now rising, that we had yesterday. So that looks like a decent follow-through and follow-on situation. On to Blackbird, and here shares had a good run in June, July, and it looks like they're having another go again now. We're above the 50 and 200-day moving averages at basically 6 pence, and above that looking for a retest of July resistance, and maybe up to 9 pence by the end of this month. Hopefully this time the shares will go up and stay up. On to Eurasia, which came back against the odds, and here it's interesting that we had the initial spike there through to our resistance line there, the resistance line target there around 3.3 pence. Current situation looking slightly more encouraging than one might have expected, maybe, with the support coming above a now rising 200-day line at 1.9 pence. The longer we stay above that rising 200-day line, the more chance that we have of a retest of the initial post-suspension spike. Probably the other thing to note is that if you are cautious, you wait for an end-of-day close back above the 50-day line at 2.3 pence before assuming that it's safe for the bulls. Onto a situation which looks quite tantalizing at the moment, and that is EnSilica, the UK's Nvidia, apparently. Here you can see that we've gapped up above the 200-day line there. We've already got the 50-day line rising, and presumably the 200-day line will start rising too. That suggests that we're going to the run-up to a golden cross, which we'll get hopefully over the next week or two. The longer we stay above that 50-day line and that broken February resistance line there at 47 pence, the greater the chance of a move to 80 pence as soon as the end of next month, and maybe even sooner, given how good that setup looks at the moment. But the gap higher today, certainly significant from a technical perspective. On to Finseta, which had an update, I think, a couple of days ago. Here we've got a rising trend channel from November. Top of the channel there heading for 55 pence, which we're looking for by the end of next month or even sooner. RSI rebound off neutral 50 as well, and we've bounced above a rising 50-day line. We've already got the 200-day line rising anyway. So above 37, looking for 55 on Finseta. Onto one of the, I suppose, dogs of the small cap area, but it looks as though even Mast is trying to recover its poise. We gapped up at the beginning of August, and we've held that gap, almost held the top of that gap, in fact, only marginally below it, and gapped up again today. That means we're looking for the top of the rising trend channel there from the beginning of June, as high as 0.24 by the end of next month, which would be quite a coup given the trials and tribulations at the company. Onto a stock which disappointed us a bit after exceeding our expectations last month. Here you can see that there was the major 80 pence resistance, which was broken earlier in the week, which was obviously disappointing. It means we've got to regroup the rising trend channel there. Just a chance there of the shares staying above the gap floor there at 66 pence, and above that, then looking for the stock to head back to the 80 pence plus zone. But the key here now, after coming back so far, is that we hold that gap there at 66 pence. Finishing off with the stock on the Aquis market, which I obviously champion like a demon. Here you can see that we've got Valereum, and broken its resistance line there from March at 4.3 pence, and now the 200-day line at 4.9 pence. If you look closely, you can see that both the 50 and 200-day lines are now rising, which suggests we're going to a golden cross, which would be quite an achievement in terms of the technicals. Initial target there, the top of that broadening triangle there from December at 8.2 pence, and we're looking for that as soon as the end of this month, given how fast the shares seem to be moving at the moment. Ideally, we stay above that broken red resistance line there at 4.3 pence in the interim. That's it for me today. More updates tomorrow.